Hello guys, we are from group 6 and today we will presentation about credit risk. My name is Ester Purnama Sari and my partner Nirmayana. Okay, knowing credit risk. Credit appraisal. 1. Ensure that the investment is healthy and not seasonal but long term. 2. Releasing investment options that are in line with the development strategy so as to profit optimal returns. 3. Growing up entrepreneurship as an element of capital in development. 4. Make value added maximum for development. 5. Reducing or eliminating state difference on products by the state. 6. Provide the widest possible employment opportunities for residents of the countries concerned. Last, the basis for our decision making for an investment that supports development. The following are the types of credit risk. 1. Issue risk. This occurs because the securities issuer is unable to pay it to the bank for the value of the securities owned by the bank according to predetermined maturity date. 2. Lending risk. This happens because the customer or debtor is unable to pay off the facility cash loan or non-cash loan in accordance with the due date that has been determined between the two parties. 3. Counterparty risk. This happens because counterparty is unable to settle its obligation to the bank on the date before maturity or after maturity according to the agreed date. The principal credit risk management identification. Now the debtor measurement measured according to business scale because the old palm business is not the same as the groceries business. Control. After liquid credit, the creditor is obligated to control the debtor during the loan period. Communication. Keep relationship with the debtor so that we always know the obstacles in the field and immediately find solution if there are signs of the bad credit. Corporate credit risk. Lending to corporates is often referred to as risky debt. Corporate credit risk is a risk that can be suffered by bank and investor upon its incurrence defaulting repayment of the principal and interest on the company debt or the principal of debt securities is used by a company. In the words, investor experiences losses on their investment because the company's debtor failed to meet the obligation to pay principals and interest on debt securities that have been issued at maturity set by both parties. Credit risk to the retail customer. For bank in the developing country, something this has political nuance, especially when it comes to credit for micro, small, and medium enterprise (MSMEs). If the credit scheme is in full government, according to Ali, states that the technique of assessing retail customer credit has experienced development as follows. 1. Existence change of orientation from branch-based lending becomes centralized lending. The basis of decision-making lending has undergone change. 2. The happening development banking product has led to the market personal finance experiencing change. Two types of lending markets are now formed. Secured customer finance, represented by housing loans. 2. Unsecured customer finance, which is represented by credit card lending. 3. For banks in developing countries, this is generally a breakthrough. This means that short-term sources of funding can now be used to finance long-term projects such as housing projects due to the issuance of securitized bond. Hence, the short-term funding source has instantly converted into a long-term source of funding too. 4. Progress handles customer account associated with types personal finance, secured property in banking in many countries takes place on an ongoing basic sustainable. Bank activities in providing unsecured customer finance has been influenced by the development of various statistical models that measure level credit standings from a prospective debtor, known as credit scoring model. Okay, the next slide. The next slide will explain by my partner. Thank you.
Credit application analysis. In analyzing the credit application of a prospective debtor or customer, the steps generally taken are: 1. Request credit. Step initially, a debtor or customer obtains credit must submit a written application for credit to the bank. 2. Debt collection and observation guarantee. After accepting the application for credit, the analysis will collect and about the applicant whether the submitted debt is true, usually by conducting a direct survey in the field. 3. Analysis credit. When the debt required, if sufficient, so a credit analysis will be carried out with 6C, 5P, and 3R. Analysis 6C. 1. Character. This character includes the honesty of a prospective customer in providing information relating to himself and his business, other obligation to the other banks, as well as personal and business interaction that are always carried to capacity or ability. The customer's ability to lead his business or the place where he works, as well as what other sources of income are apart from salary. Does he have a side job? 3. Capital. It must be seen that the prospective customer's capital, such as savings in a bank, the company's financial statements if it owns the company. The bank will not provide credit if the prospective customer does not have sufficient capital. 4. Condition, saying the overall economic condition at the regional, national, and global level because it will relate to the business run by prospective customer. 5. Collateral or guarantee. Usually the bank will ask for guarantees as proof of the seriousness of the prospective customer for the proposed credit loan and for the bank as collateral in the event of bad credit. Collateral that is often requested is in the form of land certificates, housing, and motor vehicle (BPKB). 6. Cash flow. Looking at a number of transactions of prospective customer at the bank where they apply for credit, do they tend to balance the minimum you are limited to maintain cash flow? Analysis 5P. 1. Personality. Usually bank will look for comparative data with other banks, social media, family condition, and various other sources of information. 2. Purpose. Ensuring the purpose of using the fund, whether for consumption or for the implementation of a business that will be run or has been carried, so that additional funds are needed to develop the business. 3. Prospect. The bank will assess the business prospect run by debtor or prospective customer will grow or even decline in the future. Is it a seasonal business or indeed a sustainable business? For payment, the bank will look for that on how to estimate the repayment of the loan to be given, depending on the debtor's financial ability to fulfill all its obligations. 5. Party. The party or class of prospective bank borrowers needs to classify their prospective debtor, whether they are new or experienced entrepreneur, whether they are classified as micro, small, medium, or large enterprises in terms of business asset and income. Analysis 3R return. An assessment of the result to be achieved by the prospective borrowing company of obtaining credit, whether the result of the business are sufficient to cover the loan process and at the same time allow the business to develop in sustainable manner to repayment the continued part of the return the calculates the schedule and period of repayment of credit. 3. Risk-bearing activities, saying the resilience of a prospective borrower company to bear all the risks of failure such things happen that are not desirable in the future in running the business. Causes of bad credit. Supramono 2009 mentioned several aspects that cause the credit to become bad, even thoughts a comprehensive analysis has been carried out, namely aspect customer, incorrect use of credit, less able to manage finance, there is no good faith. Aspect bank, quality of bank official, competition between banks, internal bank relation, bank supervision.